how a reinsurance in these cases play a role for Indian business abroad? What is the role of a reinsurer or a reinsurance brokers in this? If you can enlighten on that.
Before we delve deeper into this particular question, I would like to give a very brief introduction as to what is reinsurance, because I think that is also pertinent. Reinsurance is technically insurance of an insurance. So giving it in a simpler way, when insurance companies are in business of risk. So what they do, an insurance is a risk transfer mechanism.
Yes.
Okay. So what they do, they own the risk of a client and promise him that in case of a claim, we will pay you. This is how an insurance works. But how much risk they can onboard would depend on the balance sheet, solvency ratio, and product they have filed with the regulator. These are the three things which becomes important. Anything beyond that, they would need to resort to something what is called reinsurance. Means they would then become a client and they would go to global giants to buy insurance of the risk they have taken.
Okay.
So this is typically how a reinsurance works. Giving an example, today let us take the example of say Reliance. So Reliance has major factories world over and their asset size could be 1 lakh crore or 2 lakh crore. No Indian company has such a strong balance sheet to insure it, because if tomorrow a big loss happens in one of the, it will wipe out the entire insurance company and the reserve which they have accumulated for 30-40 years. So what they do, they would keep a part of it, maybe 5%, 10%, and balance they will reinsure. And this reinsurance is also not given to one company, it is spread globally. So somebody would pick up 10%, somebody would pick up 15%, 20%. So this would depend first on the size, second also on the complexity. Now complexity, why complexity plays an important role? There are product expertise. To give an example, there is a product which is called kidnap and ransom. Now kidnap and ransom is a product which pays, if suppose there is a kidnapping, then the ransom which the client would pay is covered by insurance company. Now that product is not popular or not understood by a lot of local insurance companies in India and international. Whereas globally, there are experts who know how to insure and manage. Okay. So if a client comes to an insurance company and say that I want to buy a kidnap and ransom cover, so they would have to resort to something what is called reinsurance. So this is how our insurance works. And of course, there are brokers who have expertise in finding the correct reinsurer to cover these type of risks. Relating this concept to Indian interests abroad. So there could be three different scenarios. The first scenario could be that a pharmaceutical giant looking to buy a liability policy for its global operations.
Okay.
Now, three complexities. First, pharmaceutical. Secondly, liability if the limits are big. I told you if the limits are big, the exposure is big. And third, multi-location. So, any country would struggle to structure such a program. Even the advanced countries like US, advanced countries like Singapore, advanced countries like UK would struggle to do it. So there a reinsurance comes into the play. So this entire program has to be structured from a reinsurance angle. Multiple reinsurers are likely to participate in this particular program. Wordings, coverages, exclusions are structured to suit the locations, the operations of this particular pharmaceutical giant, and that's how it is working. So that is one example. The second example could be that if suppose in any specific country, the insurance company does not have a network and they want to insure a property in that particular country.
Okay.
In such cases also, insurance company would use something what is called reinsurance, because reinsurers generally operate globally. So these are two examples which I gave you.